Hello, everybody, and welcome to Tequila Talks with your host, Jorgito. And today, our first guest is my good friend, Mr. Tom Tarkowski with Prime Credit Advisors, the credit miracle man, right? No. Or what's your nickname?
The chief troublemaker, right? That's how I typically like to call myself. No fancy names, no founders, no CEOs or anything of that nature.
The chief troublemaker, but you're also the chief, credit repair maker. You've been doing this for quite a while. I know right now in these times, credit is, in my opinion, it's probably more valuable than cash in hand. You know what I mean? And, a lot of people either weren't trained to establish credit, how to keep up with credit, what is good credit, you know what I mean? How many trade lines to have, they hear so much information. But I know we've been working together, Jesus Christ, what is it, 14 years at least? 12, 14 years?
12, 13 years now, yeah. So quite a bit of time. Probably we can say that we probably together reviewed over thousands of reports at this point. Yeah, it's not in hundreds, it's in thousands.
Oh, that's for sure. Tell our audience a little bit about you. Like, how did you even get into credit and credit repair?
Yeah, absolutely, Joe. So first and foremost, thanks for having me as a first guest. It's an honor. It's a pleasure to always be around you and do business with you. And like you mentioned, over the years we became friends. So I'm grateful to have you in my circle of friends at this point. It's not just a business; it's a friendship. So thank you for that. A little bit about me. You know everything. Some audience might not know much. So once again, Tom Tarkowski, Prime Credit Advisors. I've been in credit repair business itself for over 12 years now. We just turned 12 years just 1 month ago. So little anniversary. So we hope to go another 12 if we can. But around the credit reports, I'm actually, as you may know, I'm around credit reports for over 20 years already. I've been a finance manager, finance director for one of the biggest auto retailer in the world. The company was called AutoNation. So I was always around compliance issues, credit reports, good credits, bad credits, and I've seen a lot of different problems that people had it. And when I decided to leave a corporate world, I have decided to open up my own business and actually help people with bad credit because I've seen how they were struggling of getting auto loans. As my previous career, I was dealing with that type of business. So that's how kind of that drew me into credit repair naturally. Plus, I already had some connections at different banking institutions. So I was around banking and finance for many years of my previous career, and this was just natural transition to this one.
Awesome. Do you love it? Do you love what you do?
Yeah, if we would not love what we do, we would be already out, right? We would do already something different. Obviously, that's already the path of our career that we picked, and probably going to be doing loans forever until the last day, right? And probably I'll do credit work in credit repair and assisting people with that until I'm pretty much done and ready to retire.
Absolutely. If not, we're going to be doing it out of Mexico, right? We're going to be neighbors and doing it virtually.
That's our quiet plan. Don't share with others.
Yeah, no, for sure. But that's the amazing thing about what we do. We can do it virtually from anywhere in the world, which is awesome. But one of the first questions, and this is, oh my God, I've been getting asked this question as long as I can remember. Checking your credit is going to drop my score. I don't want to check my credit because my scores are going to drop. What is the answer to that?
So to simplify the answer, yes and no. Okay, so let's put it some scenario. We have some time to have a conversation about it. So when you checking your credit because you're trying to get a loan, let's say a mortgage, there is no way your lender will be able to tell you what type of mortgage rate you will get, what type of deal he can structure without checking your credit. So if you're gonna do that once or twice or three times, nothing will happen. You have something called a protection term, which is 30 days. You can shop around with different creditors, and they all need to have opportunity to rate your deal at the same credit score. So your score will not drop because you pull your credit a few times. Also, when you're doing something called like a soft pull, that we call it, something that you technically not apply for any type of lending, that also will not affect your credit in any shape or form. This is simply for you to monitor your credit. There's a lot of different credit monitoring websites right now that we have out there. Obviously, internet is a beautiful thing. We can find a lot of information. So credit monitoring also will not drop your score. But now, let's take it for instance. You have not the greatest of a credit, and you desperately need new car. And we come across that most often when people actually have credit decline due to inquiries. They will go one weekend to shop for a car. They will visit 4 different dealerships because let's say they got a big no at the first visit. They will go to the second dealer. They will get no again. They will not lend you. They will go to third one, fourth one. Whole Saturday they will spend just going from dealer to dealer. What those dealers will do, since you are trying to get the car, they will rerun your credit each time you're at the dealership. And you might think that you went from one company to the other and they're running you with different banks. Majority of cases, those banks will kind of repeat from one place to another, right? Because all these dealers work with the same major banks. So if you already got declined once, let's say for instance with Chase at one dealership, now you're going to a second dealership, they will run you with Chase again. They not know what you did at the prior place. They just want your business. They want to sell you a car. They want to have you approved. So they will run you through multiple different banks. Now you go back home, you're checking your credit karma, and you see 30 inquiries after one Saturday of shopping for the car. Yes, now you're going to look desperate. On another visit next weekend, now you're going to look like a desperate consumer that desperately is trying to get some sort of a loan for that car or anything else that you're trying to apply. So in that case scenario actually can lower your score. Otherwise, you completely fine. Inquiries have low impact on your credit.
Okay, I mean that's great information. Another thing that you brought up, what's the difference between a soft check and a hard inquiry?
Yeah, so soft check, soft pull, what we call it in the industry, right? It's something that you just run your credit to see where you stand with your credit report, right? So, for instance, you might not know that, but your insurance company is running check on you here and there without notifying you about it. They just want to make sure that you are still kind of in compliance with and the guidance of the consumer that they would like to have, they would like to do business with, right? They will run that kind of in the background. Your credit card company that you already have the credit card with, they will do a check, random check on you just to see if you are still in a good shape, the credit score didn't drop, or you might not run through some financial issues that all of a sudden they will either decrease your available credit or maybe completely even close out your account. So those are soft inquiries. This is something that you're not applying for a loan, you're just checking your credit for various reasons. Hard inquiry, this is where you're going to an institution to obtain credit. This is hard inquiry. This is something that will end up on your credit report. It will stay there for up to 24 months. However, the good news, and another myth buster, even though you see something for 24 months on your credit, actually in terms of inquiries, only last 12 months have impact on your credit. So only last 12 months. So let's say if you went 14 months ago for that car shopping spree and you did 30 inquiries, even though they are still there, after that 12 months, they no longer have any impact on your credit score and the report.
Okay, that's great to know. I had no idea about that.
You see, we always can learn something new.
Yeah, I mean, that's the beauty of life. Every day, if you learn something new, or at least one thing, it's a great day. So that's awesome.
Absolutely.
Let me ask you this. What are the biggest misconceptions people have about credit scores?
You know what? That's a very open question. There can be a lot of different issues that we can touch here, but I will bring one that I come across often. It's a misconception between what is the charge of and what's a write-off. And I believe so. I had a conversation with you about a week or two ago about that. after one of our fresh calls that I received, and we kind of went over that. So charge-off. Many people call and say, like, Tom, I have a bunch of these charge-offs. I just need to get them removed from my credit. I don't owe nothing to the bank. It's charged off. And this is where we have that misconception of what is charge-off, what's the meaning of charge-off, and what's the meaning of actual write-off. So charge-off, technically, the meaning is very simple. Charge-off is account that was closed with outstanding balance due to no payment. You did not pay that on time. The bank could not collect it for, let's say, 30, 60, 90, 120 days, and eventually they decided to close out the account. And now you just have one opportunity just to pay it off. Otherwise, there might be different consequences, even going with you to court, right? The write-off is when you actually do not owe to the bank anymore. There was a debt that was not paid. Bank was waiting and waiting for you to make some kind of commitment, to make some kind of deal, let's say settlement. And eventually they decided, we're not going to sue you. We're not going to pursue this debt. Actually, it's worth for us to write it off and kind of get a tax benefit out of it at the end of the year for us as a financial institution. And what you're going to get as a client at the end of the year, you will get a form, tax form 1099-S, because now the forgiven amount that bank gave you is considered income to you. So now you need to just pay tax out of it. So that's the biggest misconception I think people have, that they feel that once the bank will charge off my accounts, I no longer owe any money. No, you still do, and there's different laws that will apply to you. There's statute of limitation law, which is separate from our fair credit reporting law. So statute of limitation, let's talk about local state that we are in, Illinois. On revolving accounts, bank or any other financial institution that borrow you any type of money will have 4 years to file a lawsuit against you if that's a revolving account, and 10 years to file a lawsuit against you if that's any type of installment accounts, such as your personal loan, car note. Those accounts will have 10-year statute of limitation.
Wow, that is great. Since we're talking about, negative accounts, collections, charge-offs, how long do they typically stay on your credit? When are they automatically removed?
So yeah, that's another kind of question. We can kind of bump it up to that misconception, right? So some people feel that when they open account, this is where your date starts with that 7-year period. So actually, positive accounts will stay on your credit up to 10 years from the date of last activity on the account, meaning typically last date of payment, right? The account is being closed. Let's say on your behalf, you've decided to close the account for 10 years. Up to 10 years, this account will stay in your credit. So we'll have that positive impact on your credit report for the next 10 years. Now, with negative accounts, there's two different negative accounts. Regular negative accounts, such as your accounts with late payments, accounts such as charge-offs, collections, those accounts will remain in your credit for the next 7 years from the date of last activity, which is your date of last payment. Now, public records will stay up to 10 years, such as bankruptcies. Before we had, obviously we are in the business for so long, younger generation don't remember, but still 10 years back, we would report even tax liens on the credit reports. That's no longer a problem, or people do not report anymore tax liens. The same judgments, right? Long time ago, we had a lot of judgments on credit reports. We don't see them anymore because the law was changed a few years ago. The judgments will no longer be reported. So the only public record which we might see right now is the bankruptcy, and the bankruptcy will stay 10 years. Unless it's a Chapter 7, might go all the way up to 13 years, because obviously Chapter 13 takes you a little bit longer to pay it off, and then that 7 additional years kick in. So it might even stay up to 13 years on your credit.
Wow. Okay, that's great.
That's a long time.
Yeah, it is a long time, but hey, time flies now, so. Right. I do get this question asked a lot as well. Hey, I have a lot of collections, and I want to fix my credit. Do I start paying them off one by one? What's your recommendation on that? People that want to pay off collections, charge-offs, etc.?
Yeah, so I'm a firm believer that, let's say, especially those are the people that already talk with you. So that means they are interested in buying a house, right? Getting a mortgage. So when you're gonna call me in that specific scenario, that let's say you're gonna say, "Hey Tom, I'm trying to buy a house in the next 6 to 8 months. What should I do? I would like to make maybe some kind of monthly payment arrangements with the collections." Well, in that case, that type of payoff, it's not really in your favor because your credit will not improve until those collections are paid off. Also, on the other hand, George, if we're talking about working with the collection agencies, you're already in a collection, right? So a lot of people think now they are obligated to pay the full amount, and that's not true. So you're already in a collection. Once you're in a collection, it doesn't matter if this collection will be paid off in full, paid off partially as a settlement, one-time settlement, and you're going to save a lot of money. It will not have any other impact on your credit report as just a paid off collection. Again, doesn't matter if you paid portion of it or full amount. So I always ask this question, why to pay full? You're already in a collection. Why not to save yourself some money? And let's try to settle this account for you at as little amount as possible. And this way they will zero out the account. Also, some of the collection agencies, people may not know that they are open to actually negotiate the settlement if you are aggressive enough and give you pay for deletion option. What's that? Meaning I will give you my payment, but in return, instead of you just updating my account on credit to zero balance, you're actually willing to remove that record completely as it was never there. That's the best case scenario for the client because now there is no record of that collection. Now the score immediately will start improving, of course, depending on a lot of multiple other factors that we have on the credit report. But otherwise, if the credit is perfectly fine, aside from few collections, if you can accomplish that, you're literally improving your credit immediately. You're going to start seeing those changes immediately.
Awesome. That's awesome. Let's talk about people that have low credit scores. Is there anything they can do quickly to improve their scores? Is there any hacks out there?
So in terms of low scores, and again, you know how I work. I'm not a cookie cutter type of person that will throw everybody in the same bucket. I always like to review credit reports and see exactly what the client's needs are, time frames that they have, the goals that they have, and we can apply specific strategy. But overall, if someone has a low credit score and this is due to some bad credit or lack of credit and bad credit and mix of both, I always recommend if you have some credit card debt that actually is making your credit low because your utilization ratio is too high, start with that. Credit cards always will have the biggest impact on your credit, and they act the fastest in your credit report in terms of fixing and improving the score itself. So you can call me and say, like, Tom, I want to pay off the car next month. And I'll tell you, no, do not pay off the car because your credit will not change at all because you paid off the note. But I see that you have credit card maxed out of $3,500, you own $3,000. I'd rather have you put money there because now you're going to see increase of your credit report instantly the following month versus the car note. Yes, you will have maybe more buying power because that payment is no longer there. But in terms of credit, paid off installment account will not improve your credit immediately. The other things you can do, obviously, authorized user concept. That's the most popular. If you know a family member that can add you to some superior credit card with, nice open high limit with zero balance, nice payment history for last few years, that can help you offset also your credit card balances. If you don't have any credit card balances and you don't have any credit cards, that can help you actually start up revolving accounts on your credit. As you may know, credit cards are responsible for over 30% of our total credit score. So if you're gonna mess that up, you're sacrificing a lot of score, and that will cost you thousands of dollars on your interest rates on houses, cars, loans, business loans, whatever you're trying to get.
Yeah, right now, credit is most likely checked for everything. You know what I mean? If you
Oh
want
yeah.
to rent, if you want to buy, if you want to get insurance,
If you want to
any type
get
of insurance.
if you want to get employment,
Correct.
especially in our businesses, line of business such as finance, stock market. You want to work around other people's money. Yeah, you better have a good credit because no one will trust another person if you cannot run your own finances the correct way.
No, I agree. No, I definitely agree. I get this question asked a lot as well. If I close out my accounts, is that going to hurt my credit?
Yes, in many cases, yes. In some cases, just temporarily. In some cases, actually, you might destroy yourself completely. So let's kind of expand that conversation here. So if you have a client that calls you and they are well-established clients, 750 credit score, you know, 10 cards on file, maybe some mortgages that they pay on time, car notes, business loans, just a great credit. If someone like that closes one or two accounts because they no longer need it, maybe this is an account that was opened many years ago and it has low limits compared to other cards and they no longer need it, yeah, go ahead, close it. It will maybe affect you a few points in your specific case. And eventually those few points you will just gain it back in a few extra months. For instance, if someone calls and they have bad credit and now they're going to shut down the only two credit cards or the only one credit card that they have, well, they might lose another 100 points because that was the only piece of revolving account that they have. That's a 30% of your total credit scoring model calculation. And you might actually, end up having trouble because now not only you are already low, now you just drop yourself below the threshold that you can get approved for any type of loan. Even though in those cases, even though many of these cars that these folks will hold are not maybe cars that are in your favor as a consumer because those are cars that take people with bad credit. They have interest rate that is ridiculous. They have annual fees, no benefits of whatsoever to even hold them. Until you're gonna recover from your bad credit, until you're gonna be in a position that you're semi-decent and you are trustworthy again to other banking institutions that deal with the better credits, you cannot close these accounts. You gotta hold them. You gotta keep them. And if you don't want to pay all these fees, well, you kind of unfortunately have to go through the struggle because that annual fee will be there. But the one thing that you can control, pay them off and don't use them. You're not going to pay this ridiculous interest that typically those credit cards have assigned to them, especially right now with the way the interest rates are sitting. Those cards are over 30%. They will kill your family budget if you're going to start, racking them up. So stay away from using those credit cards. Keep them at zero. Unfortunately, pay annual fee, but keep them open for your sake of your credit so you can recover from it and eventually open some better credit cards. Now, another client that I come across often in this subject that we're trying to cover here right now, some old folks, right? Guys that are still kind of grew up in the era that you were not using credit cards. My parents were opposed to credit cards. My father, I think he got his first debit card when he was almost, like 50 plus year old. So they didn't believe on borrowing money. We have those clients, right? You either pay for something cash or I just don't buy it. I don't swipe plastic for anything. So those folks also come across, sometimes we come across these guys that they never borrow any money. They kind of went through life without borrowing anything. But now they have, let's say, kids that they need some help. Because the kids maybe not doing the greatest, not great as their parents did. Now they're trying to help kids buy cars or houses. And now we're pulling those credit reports and we learn that, you have a 65-year-old gentleman or lady and she has zero credit because she closed out the last credit cards a few years ago because why she would have it if she never used it? Well, that's exactly why we need to keep them. When you already build your credit to the levels that you're extremely fine and banks trusting you, giving you $20,000 line of credit with zero interest. If you don't use it, you don't pay nothing. There's no annual fees. Maybe there are some benefits. Let's say you like to travel. Maybe you can get some benefits of using with the airports. Why not to keep it? It doesn't cost you anything. If you don't use it, It just sits there in a drawer in your kitchen drawer, and doesn't cost you anything. But what it does for you, even if there is a zero balance, it still builds your credit. It's still maintaining your credit report, because banks will still report you every month as you made it payment on time, even though there was no payment, even if there is zero balance. They're still going to mark you green every 30 days that there was no late payment. That will maintain your good credit.
Awesome. How about somebody that doesn't have any credit, wants to establish credit? How do they work it? Do they get a couple of credit cards? Do they use it monthly, pay it monthly? Do they use it one time and just let it sit there? Because I know payment history is another factor on credit scores, you know?
Correct. So when you're starting, and I will advise this, that there will be no other way but one way, and I think this way is the best way to establish your credit. So a lot of youngsters come into my office, they call me, and I see them going through all these different apps online that help you build credit. And they pay hefty fee for it. They open the secured credit cards, they pay monthly fees to these apps. As simple as adding authorized user to your credit can resolve all this struggle of you building credit for many years with all these apps. Not only that, it will surpass many other struggles that you will go through while building credit, while trying to get larger limits. So instead of you opening a bunch of secured credit cards, which they are meaningless at this point, because let's talk about this whole system of secured credit cards. I like to touch on that because on the personal calls with clients, I touch on that. I never talk about it publicly. So you have the concept of credit history, right? So we're getting points based on how well we handle ourselves in the last 7 to 10 years, right? So it's a history. The way the history is built is based on a few different structures. One of the items, which is a third one in line, how many points you get, it's your payment history. How long did you have your average account, right? What's the average account? How many you have it? How long you kept it? So now if you open secured credit card, George, to build your credit, you deposit your own money. Let's say it's $1,000. You deposit $1,000 to open that account. Bank issued the card, $1,000. So now, it's already a bad deal because now they're going to give you $1,000 line of credit, which you're already securing with your own money, $1,000. So that $1,000 is not working for you. You didn't invest anywhere. You're just sitting at the bank. They're giving you a line of credit for the $1,000. Now on your own $1,000 that you give them, they will charge you 30% interest every time you use the card and you don't pay off the balance in full. Also, they will charge you annual fee. So you give bank already $1,000. They charge you interest on it, not to you, to them, and they charge you annual fee. So now let's say, okay, you got to that great deal. You didn't know, you went, you pursued that. You have $1,000 secured credit card. So now you're building your credit. So let's say in 6 months you apply for a regular credit card. Well, guess what's happened? So you applying for a regular credit card, the other bank looks at you, okay, the gentleman or lady has a $1,000 secured credit card. Let's give her $750 unsecured card right now as a starter. Because no one's going to give you larger sum of money if you just proven that you can pay back 1,000, right? So now you're doing these baby steps. And now maybe you're going to apply in a year for another card and you're going to get $1,500. And then maybe in 2 years another card, $2,500. You're not going to speed up this process, George, because many banks have the rule no more than 4 or 5 new accounts, revolving accounts on your credit for 24 months. So it's not like you're going to jump start and like, oh, I will just apply for 6 cards in the next 12 months. You will get some crappy banks that will approve you. Good ones, forget about it. And now what you're going to do to yourself, you're going to create so many inquiries, so many crappy accounts, good banks will not even look at you. No one's going to all of a sudden offer you $10,000 credit limit because you're happy with all this little thing, right? Now, so let's say you went through the struggle, it's 5 years later, and now you're coming to conclusion, wait a minute, I have $1,000 deposited at the bank. I need that money. So what do? You call the bank, you cancel your secured credit card. You just cancel your oldest account that had a history behind it, that's all gone. Now you're chopping your credit score down. You just close something that you build it for the credit history, right? That's why we have that name, credit history.
Mm-hmm.
Pointless to me. Why not to use other concept, authorized user concept? So you do have a family member with a solid credit card with a $5,000, $10,000, $20,000 limit, minimum balance 10%, under 10%, or preferably zero, paid on time for many years. You add yourself as an authorized user. All that payment history automatically is going to get transferred to your credit. So now all that payments, let's say you're adding yourself to a 4-year-old card. That 4 year of payment history automatically gets transferred. The limit of, let's say, $10,000 gets transferred. Balance of zero gets transferred. So you just covered 3 major components of credit history calculation, credit score calculation. Payment history will be there. 35% of your total credit score is calculated based on that. Revolving accounts limit to balance ratio, it's there. It's a great card with zero balance. Length of credit, it's there. 15% of your credit score is calculated based on that. It's there. So now within a month, you got 700 plus credit score. And what else you're gaining is the power to automatically apply with the bigger bank, regular bank that deals with people with good credit, and get approved automatically for regular credit card that is initially will be similar to the one that you're getting assigned to. So if there is a $10,000 limit, most likely bank will offer you something close to it because they know you will not take up on the offer if they're going to offer you something ridiculous. You just saved yourself years of building that credit. Wow. That's why I'm completely opposed secured credit card concept. It's a great money maker for the banks, but it's a bad deal to the consumer.
Wow, yeah. I mean, that's kind of I guess you could call it a myth buster or something like that, or or misconception, because a lot of people are, a lot of real estate agents or lenders send these clients to banks to get secured credit cards to start, because they don't know
I see that every
day.
I see that every day.
So, I mean, this is great information. This is good to know. So, especially if you want to, establish your credit, or faster than waiting years and years.
Especially when you're trying to get a mortgage. Let's say, especially right now when we're recording this, it's a spring market, right? Let's say you're trying to get a house by summer because, I don't know, you're trying to change the schools for your kids. You don't have time to build credit with secured credit cards. On top of it, what I want to go back to this conversation and mention one more very important subject, which many lenders call me after they already send the client to get secured credit cards. They all of a sudden call me and they're like, hey, Tom, I got the client. They open up secured credit card. I re-pull the credit report, still zero. And the card is there for 2 months. And their Credit Karma is showing 700. Well, because Credit Karma is using Vantage scoring model and you pulling FICO. FICO doesn't recognize any new accounts for the first 6 months. You got to make 6 months payments in order to start gaining any type of points through FICO. So if you have secured credit card, yes, you're not going to start seeing points for 6 months. So if that client has completely zero on the credit, yeah, you didn't really give them any great advice by sending them to the bank. They should actually get, authorized user account on them and then apply for another card. This way they have 2 cards on file. And I believe so, correct me if I'm wrong, you got to have a minimum of 2 accounts in order to be pre-qualified for the mortgage, right? At least 2 accounts need to be active.
Correct. There's, other factors involved in the mortgage, but yes, definitely at least a couple of trade lines on your credit report will definitely help you. I do get asked this all the time too. How long does an authorized user card take to appear on your credit report?
As quick as 2 to 3 weeks. But in general terms, it's going to be 30 plus days. Obviously, banks are reporting every 30 days on your report. But if you really play the game of trying to get something done quickly, because let's say you're on the rush to get something approved, you can always check before adding yourself. You can check on the statement closing date of the account that you're trying to add yourself to, and kind of time statement closing date, add additional 2 weeks. This will be the time that most of the banks will send already information to the credit bureaus already with the new balances, if the payment was paid on time or not, and also with your name in it if you were added prior statement closing date. So as fast as 2 weeks, it can appear in your credit in some cases.
There you go. Awesome. And there you go. You heard it. Be added before the statement date closes, so you can be, so it can appear in your credit faster. I mean, that's awesome. So then once they get added as an authorized user, when should they apply for their own credit card?
As soon they're going to confirm that it's there, right? So it's all about the reporting right now. So it's in the hands of the credit bureaus. It's not in the hands of the person that is adding them to the account. It's all now that between the data transfer between the bank and the credit bureau. So if they are already in it, if the credit already reflects them on the authorized user account, which they can track on those free apps as Credit Karma, they can apply instantly. But for sure, do not apply because let's say someone told you, hey, I just add you to a trade line. It will be there within 30 days, and then on the day 31st, you go there and apply for a credit card, because what if that data was delayed and now it's not there? Now you're still gonna look like a ghost because that credit line is not showing there. So before you're gonna do anything, obviously check, and once again check your credit before you're gonna apply for another line of credit.
Awesome. There's so many options out there for credit repair, and a lot of my referral partners, friends, colleagues are going to be watching this. What sets you apart from these other credit repair companies?
What sets me apart? Well, I don't want to also kind of put anybody in the bad spot here, but George, as you know me, I've been in this business for 12 years. Over the years, correct me if I'm wrong, how many credit repair gurus you've seen out there coming hot all over social media, all over Instagram, TikTok, name any app, showing up on any networking events, and all of a sudden they gone, right? People go to this business because they think, if I don't have nothing else to do, let me just open credit repair business because it's easy and I'll just start making a ton of money and helping a bunch of people fix credit, right? And they going into this business with no knowledge, no financial background, no knowledge whatsoever, any financial laws and regulations. They just think it's easy because I'm gonna just take some monthly payments from people, charge them, do a couple of disputes and hope everything will work out. I've seen at least 50 in the last 12 years that went out there, they've been the next hot thing, and they gone. They moved to different businesses, or they doing other stuff part-time, or they doing this part-time. You cannot part-time this if you're truly trying to help clients. And you know me, you've been to thousands of conversations with me, how I'm getting into debt on a specific clients. Even if you call me about the deal, I'm not just saying, hey, George, just send me the file and I'll call the client and I'll figure out. What I typically ask you, George, what do you need on this file? What the client is buying? What's the time frame? Do you know if they have any funds to settle anything? Let me talk with them. Let me figure out the dates. Let me figure out the funds. That's how you're helping people. You creating the path of helping them, not just simply counting, that's just another call, another lead. I will close it. I will make some money. And what's going to happen to them later? I don't care. I do care. Just look at my reviews online. I don't have any lawsuits. I don't have any bad reviews. If you listen to me and you follow the path that I'll create it for you, you will be okay. And sometimes, yes, it will be painful. It will be lengthy. But if that's your case and that's what your case required, I'm not gonna sweet talk for you. You're gonna call my office and you will find out where you sit as your situation, and you're either gonna like it, you're not gonna like it, but I'm not gonna lie to you to earn your business. I'm not in a position that I need to lie anybody to earn anybody's business. I earn my respect and the trust of hundreds of people that I work with. I've been in this business for so long. Only literally couple of people in Chicago is that long in this business, and they still maintaining really good reputation. I don't want to be another hot thing out there. I
Mhm.
just want to do my job.
Right.
Eat with the stable with the spoon that I eat, and I'm not here for a quick buck. That's what defines me different from other people. I don't have cookie cutter system in the office. I work with every client individually based on their needs, and I don't have any programs that are called platinum, gold, and silver because I want to sign you up for some kind of packages. That doesn't work. That's just pure baloney that they trying to suck in some of the clients and sign them up for next 2 years of payment so they can just juice up their pockets. That's what type of difference you're gonna get with me. I'll put my heart in it. If there is a will, there is a way, and I will find that way for you as long as you're gonna listen to me.
No, absolutely. You're a straight shooter. You tell it how it is and what you can do. There's no beat around the bush with you. You know what I mean? And I love that. That's how business should be ran. And
I
you
think
know,
that's the only way to do business.
correct.
I'm a firm believer, and as much some people not even gonna like us. Some even people in the industry, they're like, oh, maybe that's too harsh. No, that's the reality. That's how it should be. Why to sweet talk? Why to put some cream on something that it doesn't make sense? I think the consumer should be well aware from the get-go where they sit, where they stand, and if that means even to kill the light in a tunnel for them because they're trying to accomplish something that will just not happen the way they think it will happen, well, let it be. You need to be the messenger that will deliver the bad news. But if you can create another path for them, you still at the end, eventually you will become their hero. I've seen
Absolutely.
it. I've seen it hundreds of times. I've seen it that people call with some completely different ideas. I correct those ideas. I kind of restructure everything, and maybe they did not like the fact and things that I said at the beginning, but at the end I got them to the closing table, and at the end that's the goal.
No, I mean you're right. I've seen it happen. For several years. You provide results which are amazing, and definitely very grateful for that. So thank you so much for what you do. And I know credit repair. A lot of people. You know, don't realize the importance of credit. I'm a big believer in spending your money where it's going to bring you results, such as your mental health, nutrition, physical fitness. You know what I mean? Things that are going to benefit you. Credit should be right there, right with them. And sometimes I don't get why a lot of these clients just don't take it serious with credit repair, and it's like it's something that whatever the fee is, it's gonna change your life. You know what I mean? And that is
Yes,
priceless to me.
especially and I say this often to some of the clients, especially when you are not born a silver spooner in a family that give you a bunch of cash and you have already everything accomplished because the previous generation did it for you, and you live with a bad credit and you're not doing anything about it. And it doesn't have to even be through me, but work it yourself, doing something for yourself to fix it and build the generational wealth eventually through your credit if you don't have cash available, right? Even if this is through real estate, buying the first real estate, building some equity in it, take the equity out in a couple of years, use that for another investment. The only thing you have to have is good credit. And it's an opportunity from being poor to become, I don't know, middle class, from middle class becoming wealthy. It's credit. That's all what it takes. We have this opportunity, and this opportunity is phenomenal because you know what? Many countries out there do not provide it. There is no credit systems. There's countries that either it's cash or none. So why not to take advantage of this to your benefit of
No, I agree.
having good credit and invest in yourself and leave something for your children eventually. Don't leave stuff for your landlord and pay them rent for the next 30 years. It just doesn't make any sense.
No, I agree, and I hope people watching this sparks a little light bulb on top of their head. I'm like, man, Tom's right, and I need to make some moves. You know what I mean? And man, I have so many questions, but I'm gonna have to definitely bring you on again and again and then again because credit is a never-ending conversation. But
I'm always happy. I'm always happy to be your guest.
Oh, absolutely. One last thing. What do you like to do when you're not repairing credit?
What I like to do. I'm a water sport fan, so, spending time at the water, that's my thing. And I think that's my family thing. We all like water stuff, traveling, jet skis, stuff that have anything to do with a little bit of sand under my feet and some water in front of me and maybe margarita in my right hand. And you got the happy camper here. I'm really simple. I don't need much. And if you can throw a soccer game on top of it, that's pretty much you got me perfect there. So yeah, simplicity in life. That's what I'm about. Obviously, you also know I'm a outdoor guy in terms of I just came back from a trip that I took my family hiking a lot. So outdoors, and outdoors. That's my thing. And even working a little bit in the garden behind the house. That's also my thing. So.
Awesome. Yeah, that's why we get along. We got a lot of things in common, so I love it. And did you end up getting the gift that I mailed you? I mailed you a little something, something.
I got it, so I want to thank you, first of all and foremost. I read the card. Once again, it's an honor to be first guest. Thanks for your friendship of 12 years. And let's open up.
So I'd like to end these shows with a little shot.
So you're ready.
Shots
so
of success. Shots of,
I'm gonna be opening. I'm gonna be opening
there
up.
You go.
I'm not ready.
There you go.
All right. So
take your time.
So you tell me what we're drinking for.
We are drinking for an amazing information that you provided us. A lot of people don't really take the time to educate us and the importance of credit. For God blessing us to be alive another day, to be healthy, for your friendship, and for the countless hours of conversations we've had and more conversations we're going to have this year. So I greatly thank you. I'm very grateful for you and for everything that you do.
George, thank you so much. It was a pleasure as always. I'll put that into camera so it doesn't look like I'm cheating or anything. I'm truly going to pour the tequila that you sent me. Thank you so much. It's good that it's already after 12 because in Poland we have the saying that you should not be drinking before 12 o'clock. That means really bad stuff about you. But after 12, absolutely, that's already the right time to have the first shot. George, salute to you. Thank you very much for having me. Cheers.
That's how you start the afternoon. No face.
That's how you ending the Tequila Talks.
Yes, with a little shot of tequila.
George, thank you again for having me.
Not a problem, Tom. We'll talk soon. We'll get you again and, talk some more credit.
Thank you.
All right, take care. Bye.